Welcome to Technical Market Insights, ladies and gentlemen. And if you tuned in with us last week, then you would have been expecting that bounce we've seen in the market Monday through Friday. If not, feel free to join us this week. We're going to look back at the market. We're going to look at the daily stock charts, hourly, weekly, monthly, and the overall market. We're going to look for any bullish sectors out there, and we're going to look for any buying opportunities or any opportunities to just make some money. So as we start off, let's jump into Dow Jones, but make sure you subscribe because you don't want to miss these analysis. Coming next year, we're going to try something new. We're going to, for educational purposes, grow a very small portfolio. Probably start it with around 2K, and we will add probably 10% of our income every month and just see how quickly we can grow that based on the strategies we teach and in our books here at Technical Market Insights. So as we jump into Dow Jones, you can see last week, go to our last week video, we've been expecting a bounce out of the oversold territory into the overbought territory, and that's exactly what happened. We expected it to kind of hit these channels, which we don't have a channel on Dow Jones. We do on some of these others we'll get into, but as you can see, it did bounce, and it did bounce over the 200-day moving average. Now, before we would even touch UDOW, which you could easily, even when it's under the 200-day moving average, you can make these swings, but if you would have got in UDOW, that would have been a 15% swing in 1 week. So those are the swings we're used to making and enjoy making. That's what we're looking for. But Dow Jones being under the 200-day moving average, of course, we would not have touched that. But there were plenty of other opportunities out there, and we'll get into those in a minute. But as you can see, it is entering the overbought territory. Now, doesn't mean it's going to pull back right away. As you can see over here, it ran 19 days in the overbought territory from here to here. Oh, wait a minute. From there to there. So doesn't mean it's going to pull back next week, but we are anticipating possibly up green Monday. If not, it could start pulling back immediately. You could see that come right back under the 200-day and set another low, a lower low, right? I mean, I'm really kind of surprised it actually went a little higher than its previous high, but hey, it can happen. I don't think we're done with our monthly chart retracement. As you can see, I think we may continue a little lower there. If you go out here, you're either 7% away from hitting all-time highs or 15% away from hitting previous lows. So do what you expect to happen. If you think it's going to hit all-time highs, hey, put your money to work. If you think it's coming down, I would probably start taking profit and waiting for the next buying opportunity. That is the Dow Jones. It's exhausted the daily chart. Weekly chart, still got some bounce possibilities. And this could definitely be the green month we were anticipating. We thought October might have been green, but the daily bounce happened very quickly and faded even quicker, and that turned that month red. But the weekly charts are due for a little bounce. Could see another green week or two as that top forms in the overbought territory, and then we could see it go ahead and pull back. But right now, I'm not buying anything. All the buying opportunities we took advantage of in this territory. And these are scans. We'll go through those anyway. And let's take a look at SPY though. We're going to look at the overall market. And really, if you look at XPY, now this is one I was not a fan of entering. But I did say I think it will find its support here. Could have definitely traded that. Honestly, I don't know why I didn't, but been focused on a few other things as of lately. But if you look at that support right there, that is very strong support, even if you go into the monthly chart. All right, and look at that right there. Strong buying opportunity. So if you would have bought, we would have traded LABU on that one. If you would have looked at the weekly, if you would have bought that weekly, if you would have bought that on Monday, based on what we were saying about that support, you could have made 36% in 1 week's time. That's one heck of a game there. But as far as that goes, it may have a green Monday, right? The daily chart's going to swing, the weekly charts are going to swing, and so is the monthly chart. Now here, you may hold that just for the monthly chart. That's LABU. I wonder why that looked weird. And just kind of maybe why you bought it, because the daily wasn't been under the 200. So if you're making a monthly swing on this, it's over the 200-day bar, 200 bar average, and oversold, which is kind of what we look for. I mean, that could still have a 30% swing, which would be about 100% in LABU. Kind of. So some of these charts I hate. Looking at the leverage chart, when you compare it to the, I mean, look at that percentage swing. If you wonder where I'm looking at, it's over here where it puts the numbers on the board. But that'd be a heck of a swing if you're riding out the monthly chart. But I would anticipate the daily chart to kind of get exhausted as soon as it hits the overbought territory and the top Bollinger Band. Maybe it's a good profit taking opportunity and start watching those swings. As you'll see more, probably start trending up as that support. I mean, that's been getting hammered. It's LABU. Let's go back to XBY. So as you see that support take place, you're going to see probably some swings to the high side, as far as your lows will start getting higher and your highs will start getting higher. Now, as we look at SMH, this is one that we actually stated could trade last week, wouldn't hurt you, but we were watching that 200-day moving average. That had a 8% week. SOXL, well, that gave you a 21%, which is what we would have traded. And like I said, those weekly charts are starting to bounce. We got a little bit of bounce right there in October, and it pulled back, gave us a red October in just about all the ETFs. And we could be seeing a green November as far as the overall market goes. As you can see, when you look at monthly charts, just like daily charts and weekly charts, besides right here, you got a red month here, but there are green months going down and normally red months going up. Nothing goes straight up or down, but this is the monthly chart on Qs, and we're expecting the same thing as we see on SMH because they kind of line up well. But look at that top right there, ladies and gentlemen. I mean, that is why we called in about July 16th a taking profit warning. Markets basically tapped out on the monthly chart, and we expected a pullback, which is exactly what we got. So overall, as far as the daily charts go, I would be very cautious. Don't think there's much more room to run. You may see a little bit more beginning of next week, and then I feel like we're going to start a pullback. But as we also said in some of our previous videos, we expected 1027. We remember shooting a video there, which would have been the week before, I guess last. We expected oil to pull back into the oversold territory. You know, it looked like it could have ripped back up higher. And oil could actually form a W here, and that would, if it breaks out past the W, as you can see the W shape, right, you got a high here coming down to a low, and you got a lower high coming back down. And if it breaks up past those, we could definitely see a breakout in oil as it sets up that W form. But oil is one of our only sectors coming up bullish right now. So this is your energy sector, and this is your consumer cynical sector. But definitely feel like we're going to see oil break out. And I don't like trading commodities, so we did state before we would be getting in something like Gush for a trade on XOP. As you can see, Gush, you'd be up about 6% right now, but you could easily see that. Probably more than that. And about 5%. You could easily see about a 13 to 20% gain in that. But I would expect to see next week, we'll probably see oil bounce, and we'll start to see the rest of the market pull back. May not happen Monday, may not happen Tuesday. May start to get a little sideways, and before that actually happens, or it could happen immediately. Never be able to call the exact movements in the market, but we can make strategic analysis to help us make the most of our money. All right, so just some bullish ETFs over here. Let's take a look at the scans. We got our two bullish sectors, which is oil and consumer chemicals. You can correct my pronunciation on that. I'm sure it's wrong, but anyway, those are your two bullish sectors. And as far as bullish ETFs, let's take a look. You got basically a leveraged granite, 1.5 long on granite. Nothing intriguing, nothing I want to put my money to work. You got another energy fund. Most of these will probably be nothing we would touch, but when you select ETFs, it does give you a list of just about everything out there. These are ones that's setting up for bullish. Now some of them you got to kind of look and analyze and filter out just with your eyes, see which ones kind of fit for us. And we can actually go over here, trade this to ETFs. This will give us the bullish oversold ones, which is what we would be looking at. So LABD, that's a huge, it's had a huge drop as XBI. This is the inverse leverage ETF for XBI. So as XBI goes up, this will go down, and LABU will go up. That's the leverage version as far as up goes. So this has been bullish, so it comes up in the bullish scan, as you can see, but that could turn around as XBI finds that support. So always trade those off of XBI's chart, and I would have been taking profit up here when XBI hit that support for sure. Doesn't mean you had to go long, but it'd be a good time to lock in profit. You got some China bear ETF 3 times, real estate, that's inverse 3 times. So a lot of the bearish ETFs that have been bullish turned around last week, as we would expect, because the market was going to turn around. And that is just oil's leverage version, which if you want to trade commodities instead of XOP, which is your oil exploration and production ETF, so it holds these companies that basically do the exploration. You can go through here and pick out the bullish oversold ones in this sector. These would be ones if you wanted to trade a single stock instead of an ETF, but I always prefer a leveraged ETF over a single stock. And let's keep taking a look. So really, besides oil, there's USO. It's about all that would look good as far as oversold bullish ETFs would be oil, as far as I'm concerned. And if you want to trade that through XOP, be looking at Gush, which, see, XOP got oversold. As we said, it didn't touch the bottom Bollinger Band, which is like what we'd like to see. Sometimes it doesn't happen, so we recommend it. If you go in light and then scale in. So that is that's about all we got right now to trade. Everything else we're taking very cautious approach as far as swing trading any stocks. Well, let's take a look at what's out there, what comes up in the scans, and everything will probably most likely be, this is a technology company, which that chart looks really nice. I mean, you got a possible 7% swing on that before it hits the next highs. Bentley Systems, that chart's not screaming to me buy, but it could get a good swing out of it. Let's see what else is out there. Like I said, probably some of the best ones will be in your energy sector. Halliburton, just because that's the only thing showing up bullish right now. The rest of the market is trending down. Yeah, it had a bounce last week, but that's nothing to screaming I'm buying, getting ready to market to breaking all-time highs. Just not seeing that. So these are some of your scans for your bullish oversold stocks. This is as I feel like we could definitely see oil take off pretty good. I'm going to change it back to, okay, I think I already did. We definitely see oil take off pretty good with everything going on overseas. I don't think this Israel thing is going to cool down anytime soon. Don't think Ukraine's going to just come to an end. If anything, I see more wars that'll probably take off. China's probably going to try something with Taiwan. Trying not to get into the fundamental aspect of what's going on around the world because the stock charts tell me all I need to know. But there's a reason your energy sector. So your consumer cynical, we usually go over this. This is the type of stocks that's in that. So if we look at bullish, there's probably not going to be a lot of bullish oversold. But these are your stocks you'd be putting money into in that sector. Okay, so those aren't companies I'm really bullish on right now, even though the market is. So that's, always think of it, always look around. So we try to take a Peter Lynch type ideology, an intelligent investor type ideology, and add the technicals to it. It gives you a huge advantage over the rest of the market. All right, Peter Lynch was great. Warren Buffett is great. Intelligent Investor is a great book. But when you add that type of intelligence and knowledge, and with what I have is 23 years of studying stock charts, it gives you a huge advantage over just throwing money blindly, dollar cost averaging. So that's why you want to keep things simple. Keep a nice, good, simple strategy that works. So these are your companies in that sector. Nothing I'm intrigued with right now. If you're in the market and you're long, be cautious. Everything is hitting the overbought territory. Hasn't really entered it yet, but come next week, come Monday, that's going to automatically go up based on the averages of Friday and wherever Monday opens. But that will probably cross into 80 on Monday, no matter if it opens down or up. So technically it'd be overbought. Don't mean it won't keep going up, but technically market will be overbought on Monday. It'd be time to lock in profits. So this is my alert. All these are passive. Take profit, take profit, take profit. I trade very simple, and I use technology to my advantage. I don't sit back and watch the market all day. I keep the market out of my life as much as possible while still making my money, print money in the market. You can do that very simple with alerts, with setups for scans. I get notified every time the market gets oversold and every time it gets overbought, and I can easily keep averaging in, because if it's oversold here and I buy, the next day I'm going to get an alert. The next day I'm going to get, every day it's oversold, I'm getting an alert to buy, and that's what I do. I got to keep my average low, and then once it gets overbought, I sell. And I don't have to sit there and watch the market 24/7. I can do scans on my phone, very rarely even on the desktop, besides shooting these videos. So you can trade very simple with a very simple strategy and make really good money in the stock market. The problem is everybody's trying to get you rich overnight. You're jumping in calls, you're jumping in puts, you're trading options, you're trading penny stocks, and your account is probably dwindling away, which is one of the reasons we're going to come 2024, we're going to start a small account, probably around 2K, probably put 10% of our income in every month. So every payday, bam, it'll be funded, because that's how you grow an account. You want to keep cash flow coming into the account, and you want to keep that money that's coming in to keep making money on your trades. So compound interest is a beautiful thing, but compound profits, not losses. If you're compounding profits, you're going to do really well. If you're compounding losses, you're probably pretty angry at the market, which I've been there, spun my wheels for about 15 years in the market. You don't have to do that. Just find you a simple strategy that works. If you need help, follow this channel, buy the books I've wrote, kind of breaks it down pretty well and organized. Make sure you hit subscribe, hit share. Let's see what happens in the market next week. I know what I'm doing with my money. It always works out pretty well.